Hey everyone, and welcome back to another video for today. So July 29th is a pretty important date for a company like UnitedHealth because that's when they'll report their next quarterly figures and provide us with some actual guidance. So in this video, let's go over everything you need to know in anticipation, in preparation of that earnings report. I, of course, own a very small position in UnitedHealth Group. Will I add more before the earnings report? My answer for me personally right now is no. I have my position. I'm happy. I'm already down, but I'm happy to wait and pay that, let's say, premium to get more information during that earnings report and earnings call. If it's good, then the stock goes up. My position will be fine. If it's bad, stock goes down, at least it's still just a small position and I can exit and the loss will just be minimal. The impact on my portfolio will not be that big. So in this video, let's go over everything you need to know about UnitedHealth. And I do also want to talk about some other players in the healthcare industry. Also, a big thank you to all of you watching because we are now above 100,000 subscribers. So I guess I don't have to remind you to hit the red button anymore because I don't care anymore. We have reached what I wanted to reach. So thank you very much for all the support. Really appreciate all of that. But if you do want to support me even further, you can of course check out the link down in the description and in the pinned comment to the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. And also special thanks to Fiscal.ai, previously FinChat, for sponsoring this video. So as you can see, UnitedHealth market cap $256 billion or so, revenue last year $410 billion. Okay? That's a lot of revenue. Now, looking at the drawdown, currently the stock is experiencing a 54, close to 55% drawdown from its highs from, well, around a year or so ago. Year to date, the drawdown is also quite close to that, 52% or so since the month of April. Right now, if we look at the pricing metrics, trailing 12 months, PE 12.1 times, EV to sales doesn't really matter, 0.8 times here, EV to EBITDA 8.8 times, price to free cash flow 10.3 times. If we go and look at the next 12 months, by the way, the average analyst price target does sit at $380 here. Next 12 months PE, so forward PE 13.8 times, EV to sales 0.7, and price to free cash flow sits at 10. Looking at what this company is expecting to do revenue-wise, next 2 years compounded 9.3% growth, EPS is expected compounded to be down 3.5% because of course we do expect a big hit this year. Now if we go and look at the estimates for the upcoming quarter, then if we look at what the street is expecting this company to report revenue, EPS and free cash flow wise, revenue coming in around $111.59 billion, EPS for the quarter down to $4.57, and then free cash flow to be close to $11 billion. Now, for a lot of you, you're already familiar with Fiscal.ai. So if we go here to transcript and we look at the latest transcript, so not even the investor update that they gave us in May, let's look at the latest annual general meeting here. We don't want to read all of this, so we can just click on the AI summary. And this is what they told us. So of course, suspension of financial guidance until the second quarter on July 29th. Okay, so that's the upcoming important date. Why is that? Because they said the following. This is going to be where they establish a prudent 2025 earnings outlook and initial perspective for 2026. They're going to focus on margin improvement in Medicare Advantage pricing. And of course, the CEO did get that compensation, right? The CEO compensation package includes $1 million annual salary for 3 years and a one-time equity award value of around $60 million in non-qualified stock options with a 3-year cliff vesting schedule. Now, the return of Stephen Hemsley as CEO, he was already previously at UnitedHealth, did very well, by the way, when he was the captain of the company. So this is not framed as an interim measure, but as a 3-year commitment to restore UnitedHealth Group's performance. This signals a significant shift in leadership and a strategy. So again, this is not just going to be a quick fix and that's it. No, he's here to make sure that the ship is getting, well, back in the right direction before it hits another huge iceberg. Now, a while ago, I did make a video about UnitedHealth, and now we actually have even better estimates for the upcoming year. So here, as you can see, it's expected to grow revenue around 12.3%, or was expected to grow revenue by 12.3% in fiscal 25, then 6.4 and 7.1 in the next 2 years, reaching $512.4 billion in fiscal 2027. Now, if we look at the most recent numbers, we can see that has been revised down to $508.5 billion. So a drop here of around $4 billion for fiscal 2027. Same here could be said for net income and EPS. So net income for fiscal 27 was expected to be $26.45 billion and EPS of $30.30. Right now, we're sitting at $29.20 EPS 2027 and around $26 billion in net income for 2027. So the market still with all the uncertainties, the market is still expecting this company to grow in the upcoming fiscal year and becoming more and more profitable. Looking at free cash flow, here as well, free cash flow is expected to grow and actually accelerate in the upcoming fiscal years. Only 4% growth in fiscal 25, then 7.1% in fiscal 26, and then 14.1% in fiscal 2027. So yeah, and this is from right now. This isn't from 6 months ago. So of course, 6 months ago, I would have assumed that these numbers would have been higher, but they've been revised down. And even with these revisions on the downside, still expected to grow. So again, there is definitely some value to be found with UnitedHealth here. And of course, like I said, all of this is available to you on fiscal.ai, previously FinChat. If you use my link, you'll get 15% off. And if you're a new user, you can try it out for free for 2 weeks. You'll get FinChat Pro. Now, of course, the business is being split into 2 segments. One, United Healthcare Group, and number 2 here is Optum. Looking at the company's margins. So gross profit margin, as you can see, has been coming down. I'm looking here at the last 12 months. That has been coming down. Net income, there was that one quarter where net income was basically a net loss. So that's why you're seeing these quarters being much lower than the rest. And then we see that free cash flow margin has been improving, right? We are going back to where the company was previously at around 6.87% or so. But gross profit margin has been coming down. Now, one of the things that could push stocks and companies like UnitedHealth, Oscar, Centene, etc. up is, of course, more clarity on ACA, right? Subsidies, especially for a company like Oscar. But here, as you can see, we had a we had a headline coming out over the last couple of days. HHS sued by state attorneys general over ACA rule they say creates coverage barriers. So New Jersey and other states are suing the federal government over a new rule that they say will make it much harder for people to get health insurance through the ACA or Affordable Care Act. The states claim this rule, made by the Trump administration, would cause up to 1.8 million people to lose their health insurance and make healthcare more expensive for millions more, forcing states to pick up the tab for the newly uninsured. Now, according to Oscar's CEO, a lot of those members are actually in red states. And so, yeah, I think there are going to be some changes and some negotiations because this is not set in stone, right? Right now, things can still change, right? ACA subsidies, for example, are going to expire at the end of the year unless something changes. So there still is time for change. And of course, whatever comes out of these types of lawsuits on a positive side will of course be quite positive for stocks like UnitedHealth, Oscar, Centene, and all of that. But of course, on the other side, you still have rising medical costs, medical loss ratios going higher and higher. That's of course hurting the core business. Now, before talking a little bit more about Elevance, for example, which just recently reported their quarterly figures, let's just look at the stock right now, where of course we have tried to go above that 20-day moving average that didn't really last that long. And so right now we're back under $300 and back to prices well since the start of May. And if we zoom out, let's see where we were there last time, all the way back here in June 2020, where it seems like, yeah, we did, well, it did rebound above that 200-day moving average back then. Currently, and by the way, this is on the weekly, RSI is, well, just I think, oversold. And so to me here with UnitedHealth going into the earnings report, especially with the stock being slashed in half basically, yes, the company, of course, when they'll provide guidance, it's of course going to be lower than the previous guidance, because they also probably anticipate a hit, right, in margin, in profitability profile and all of that. But it's not like the business is getting destroyed and cut by half. No, I don't think that's going to happen. We've also had quite a lot of, well, politicians buying the stock as well. So maybe they know something, right? Maybe they know something, wink. So to me, yes, it might be a value play, but I do think that after July 29th, based on the guidance and the commentary, I do think, and that's my prediction, I do think this stock will go back up. By how much? I don't know. But like I said from the start, for me, this is not going to be a long-term position. This is going to be a turnaround recovery type of move. Once I get around 50% return or something, I'll probably move on to other things. Now moving on to Elevance Health, a company that reported earnings a couple of days ago. Here as well, you can see that the stock is experiencing a drawdown this year of about 38 to 40%. Market cap sits at around $62 billion, trailing PE 12.9 times, forward one 9.1, average analyst price target currently sits at $423, while the stock is at $277. This is a company that said the following thing. Well, it basically dragged the whole sector down because here as well, guidance did change. So first up, they revised full-year outlook due to elevated medical cost trend in the ACA market and slower than expected Medicaid rate alignment. The company is focusing on factors within its control, including cost management, targeted investments, and operational improvements to stabilize trends and restore long-term margin stability. The revised guidance reflects a prudent approach, acknowledging persistent pressures and avoiding reliance on near-term recovery assumptions. The company is taking decisive actions to address these challenges and position itself for sustainable performance. Okay? So it's not like the business is completely broken here. No, not at all. I mean, based on these comments and based on the numbers that you're seeing here, it's not like the business is going to be a broken one. It's a broken stock. Just like with UnitedHealth, it's a broken stock. So right now, full year adjusted EPS guidance is at $30. Previously, that was at $34. So yes, a $4 difference. And as you can see here as well, gross profit margin, just like with UnitedHealth, has been coming down. It's right now sits at around 26.8% over the last 12 months. And free cash flow also bottomed out sometimes here in 2024 and made its way back up to now 2.8%. But here you can see it's also far away from the 5, let's call it 6% that it was at back in 21-22. And so to conclude, to me, it's pretty simple. The market hates uncertainty. This is a broken stock. Once we get actual information from the companies, right? Centene is also, I think, reporting pretty close to UnitedHealth. Once we get a little bit more commentary from management, some guidance, then the market will, of course, say, okay, now there is less uncertainty because we know what the company is expecting. And then, well, the market will figure out where it wants to take this company. Of course, with UnitedHealth, again, it's a company that generates over $400 billion in revenue. There are not that many companies on this planet that generate that much revenue. So I do think that the trajectory is going to be on the way up. How long that will take remains to be seen, but it's not a company that will be deleted anytime soon. So yeah, highly anticipated July 29 date. Of course, Centene, I do believe, reports 27, if I remember correctly. So they'll provide us with a little bit more information since they already pulled their guidance. So hopefully we get more information during that earnings call. I'll update you accordingly. Let me know what you think about UnitedHealth and what your game plan is down in the comment section below. Like, subscribe, all of that, and I do see you all in the next one. Bye-bye.